Hey everyone, and welcome to this week's Swing Trader status update. It's Ali Corum and Justin Nielsen here. And Justin, you're really reaching down to the bottom of the barrel if it's me on this show. So lot of people out this week, but I know you're going to break everything down for us really well.
I don't know that people would think that we're at the bottom of the barrel. I think we could go lower. So,
How low
um,
can we go? No, I'm so excited to be here. I love talking with you guys about all things swing trader. So excited to participate today. So let's get into it, shall we?
Absolutely. And people should know that Allie actually is someone who is on a lot of our chats and stuff like that. She's throwing ideas out there for us as well. We love when she throws ideas out because then if it doesn't work, we have a
Yeah,
scapegoat.
just
It's
blame
it's
it on
it's
me.
absolutely perfect, a win-win for us. So but yeah, let's go ahead and start with the Nasdaq Composite. I think the action here has been very strong, continues to be strong. Allie, you and I were talking just yesterday about this kind of short-term resistance that we were looking at
Yep.
from last Monday's high, and we're really kind of getting right up there to the former highs from July at that 18,671 level. And the S&P 500, of course, looks even better. I mean, it's kind of been already at new highs. Now, granted, today it wasn't as strong as the Nasdaq, but one of the things that does bother me is this breadth issue. So
Right.
RSP, did not have a great day yesterday and did not have a great day today. I mean, it did get support at the 21-day moving average line, but this equal weighted S&P 500 looking very different from the S&P 500 or SPY. So it's a very different look. And same thing with Qs. You look at the Qs, and again, we're kind of getting up to that 500 level, potentially at new highs, but QQEW looking a little weaker. That one coming down also to the 21-day moving average line today, getting support, which is good, but under the surface, I think we might have a breadth issue.
Yeah. So what does that mean for swing traders? Well, how do you adjust for that?
Well, this has been the trick because over the last few weeks we've been talking about the breadth improving. We were seeing RSP actually outperforming and looking stronger. And even as we were noting the last couple of weeks, the small caps, if you look at IWM, that was looking really strong last week. And the week before, a very big, powerful move as it crossed this downtrend here. But that's come in quite considerably. And MDY, the med caps were also looking very interesting. So we were looking to kind of spread our wings a little bit more. We were looking at more of that breadth, and it's kind of like as we've noted a lot over the summer, the rotations are so fast and so quick. It's really hard to stick with things for very long because a lot of times that rotation will kind of knock you out. One more thing on I guess on the small cap and mid cap side that we do need to address is
Right.
that the 10-year treasury yield, if that'll come up for me. Let me try one more time. There we go. 10-year treasury yield. I mean, we got above 4% in the last couple weeks, and then we just kept on going. So this has been a very strong move here. And of course, that's been changing some of that rotation too,
Yeah. Home
some of the
builders.
strength.
Mm-hmm. The home builders for sure.
Absolutely.
Okay, so
Yeah, and I'll
with
just show the home
yeah, we
builders
can
real
show
quick. That was
XHB there.
something that we did exit
Mhm.
yesterday, and a good thing too, because it just got worse today.
Mhm. So we're in a power trend, Justin, but we have these rotations underneath the surface. So in terms of, the kinds of setups that you're looking at and just sort of what's out there, what are you seeing? Does it felt like today maybe there weren't a ton of things to buy? I mean, on was one that we talked about on IBD Live this morning. It just a potential setup, but it didn't really seem like outside of that there was a whole lot of stuff to buy. So what are you seeing from a swing trading perspective?
Yeah, that was something I was taking a close look at, but part of the problem was that, after its strength in the
Mhm.
morning, it really came down and was not looking great for a good portion of the day. It wasn't until the end of the day that it started looking, a little bit more interesting.
Right.
Spotify, which we already have
Mhm.
on, SwingTrader, this
Looking
was
good.
looking a little bit more interesting. It was actually kind of considered for a potential add,
Mhm.
to our position. The problem is that a lot of breakouts have been a little bit tougher
Right.
to play, and so it was okay. Do you stretch out right here on what looks like a breakout? Dominic and I, as we were going through our lists today, um, every time we looked at something that was up and looking good, most of the time it was extended. If it wasn't extended, earnings were around the corner. So I'm trying to remember a few of the ones that we were talking about. But yeah, earnings were around the corner for a lot of them, and that just makes it. Which one? Oh, EIX. Yes, thank you, Dominic. EI, yeah, Edison International in the utility space. This was getting back above the 50-day moving average line, 7 days until EPS due.
Mhm.
There were a lot that kind of had that look. And look, this hasn't been the strongest one in terms of relative strength, but the main point was it was either
Mhm.
extended or earnings were right around
Right.
the corner. So very difficult to find
Mhm.
that kind of sweet spot for pullbacks, getting support. I mean, there were some pullbacks out there, but coming down to the 10-day
Mhm.
moving average line,
Right.
um,
It's not much of a pullback.
yeah, RCL. This is one that, and this has earnings potentially coming up
Mhm.
in 7 days as well. We did have Viking on, and we got rid of that unfortunately yesterday, and that one just zoomed right back up after getting supported its 10-week moving average line. CCL also looked good, but again, usually when we're looking at pullbacks, it's not to the 10-day moving average line. We at least want to see the 21-day moving average line get hit.
Right, because, yeah, even that the 21-day line is still considered an aggressive
Right.
entry a lot of the time. So, Justin, I think this brings up a really good point because I feel like lately you guys on the Swing Trader team have changed the strategy a little bit when it comes to earnings season in terms of, perhaps the types of entries, but also holding versus selling. And it's going to depend on what it is, what
Yeah.
that circumstance is, but you guys have changed a little bit. So talk to us about that.
Well, and Kava is the example that this was a conscious decision to, okay, we've got a quarter position, we've got a lot of cushion on it, and we did decide to hold this through earnings here. And that ended up really paying off. It gave us a good good amount of cushion on that position and has allowed us to get a little bit more aggressive on this position and make it a lot larger than even just a full position. So that that is something that we do plan on doing when applicable.
Right.
The problem is that we did have that cushion going into the earnings. We had reduced it to a quarter size. We just don't have as many stocks with that kind of cushion right now. So you will notice, for those of you that are on the Swing Trader subscription, you will notice that our continued strongest and biggest position is SSO. It's kind of one of those if you can't beat them, join them trades where
Mhm.
recognizing that, yeah, there is some potential weakness in RSP, we're going to just kind of, go more towards the S&P 500. And again, recognizing that there's kind of a breadth issue, we're going to just
Right.
continue to hold this as our largest position, that
Yeah.
leverage position on SPY.
Yeah, that's the kind of thing I like to do as well. So makes sense to me. Okay, you mentioned Vikings, so let's go back there briefly, if you could. Let's just tie a bow on the decision making process here, because a lot of what we like to do on Swing Trader Status Update is post analysis.
Yeah, and so this was probably a little bit early on my part. We did get below the 10-day moving average line on Viking. We had crossed kind of below this high where this is where I was kind of looking for it to get support. And when it did cross below that level and underneath the 10-day moving average line, I just didn't want to take a big loss. remember yesterday was, if it hadn't been for Nvidia, it would have been a
Yeah.
very different looking day for the indexes. So, given that, I did, pull the trigger and exit out of this one. And again, sometimes it happens where they're just going to go right up without you. And RCL, CCL, they all looked good today. I would say that actually RCL and CCL were the ones that caught my attention first.
Mhm.
Viking didn't look as great, but then as the day wore on, Viking started looking stronger and stronger. But then again, do we want to start a new position with a pullback to the 10-day moving average line? That's just not
Right.
the entry that we were kind of looking for.
Yeah, and something that you guys say often, which I think is worth repeating for those subscribers out there watching, is that if you have a healthy profit cushion on something and you see us selling, but maybe it's something that you want to try to get a little more juice out of, or hold part of that position, that is always an option too, right? Like this is a great idea list that you guys are coming up with.
Absolutely. That at the end of the day, that's what the intention is of the swing trader product. It's more of an idealist. That's why sometimes we're throwing a lot of ideas out there, and you might be handling them very differently. Back before COVID, when we were actually getting out in person and speaking to people a lot more often, it was one of those things that was kind of fun because I would hear from people that were using the product, "Hey, you know what? I came in with you on this trade, but I held on to it for a lot longer and I turned it into a position trade." And that's great. If you make more money on it than we do on Swing Trader, at the end of the day, that's our goal, is to make our subscribers more money, not for it to be a big huge thing for us. This is a model portfolio. The money doesn't really matter for us, it matters for our subscribers. So again, if you're going to take the ideas and run with them, get even bigger gains from them, that's great as far as we're concerned.
Great. Okay, so you mentioned Nvidia, Justin, so let's go there.
Yeah, absolutely. I mean, Nvidia still remains, one of our larger positions. And again, yesterday, a very strong day. I mean, this was up.
Mhm.
Uh,
4.
if I can get it, okay, over 4%, 4.14%. A legitimate breakout, and so this was looking really strong. The problem was that it was kind of masking some weakness underneath the surface. Now that Nvidia has gotten up to such a large market cap, I mean, we're at $3.5 trillion now for
Mhm.
Nvidia. It's a big weight on both the Nasdaq Composite, the S&P 500, the Nasdaq 100. You name the index. If Nvidia's in there and it's a market cap weighted index, Nvidia is going to have a lot of weight there. So we're glad that we have this position. We don't have as much of it as Leaderboard does. They've been really kind of riding the coattails of Nvidia this whole year. But we've got an oversized position in Nvidia, so we are keeping that one. We did try a Vago, Broadcom, I should say, and this one just kind of pulled back. Doesn't look as strong as Nvidia. So this is something that we talked about on IBD Live before. Instead of trying to go out and find that stock that is looking kind of almost as good as Nvidia, we just have Nvidia.
Yeah. And the gain right now is almost 17% for that trade. So nicely done, you guys. And I also do own a position there.
Yes, I have a position as well.
And speaking of Kava, the gain there for leaderboard up about what, 53%?
Yeah, yeah,
Wait,
yeah, from the entry.
from
Now,
the entry, right?
yeah, so
The initial.
that is an important point, because when we do write these up and put them in, we are using what the position size from the entry is, but that will change dramatically based on our adds and subtracts. And remember, we were only at a quarter position kind of going into that earnings when we had that big jump up. So when you consider the average
Average cost.
cost and average exit so far with all of our moving around, it really is a lot lower than that. More like a 6 or 7% gain on the trade. And when you do go to past trades, just for transparency purposes, we don't give ourselves credit for the entry. No matter how good it is, we do take those averages, so it's a little bit more realistic for what people, if you had followed every single move in and out. But
Mm-hmm.
to your point on Nvidia, Nvidia for the trade there, it's actually closer to 12%. So it's, again, considering what our average cost got raised up to, our average cost is actually at 128.38. So I'm going to go back to Nvidia and kind of show that. So our average cost is, right around here. Let me get back to the track price. So yeah, 128, yeah, right around here. So this is where our average cost is. So we've got some room,
Yeah.
to play on this one.
Yeah. That's
And
great.
if I didn't mention it already, I do have a position in Kava as well. And while I'm at it, I do have a leveraged position in SPY. I went with UPRO instead of
Mhm.
SSL.
Yeah, I have that too. Okay, yes, we've got to disclose that. We're required to disclose. Okay, cool. Justin, what is next on the list to cover here?
Well, another one that did look pretty good today that we did pass on was Walmart. This is one that we actually had on, just last week. We were talking about this one, a good
Mhm.
strong setup, and one of the benefits of this one is that it is a little bit calmer, right? The problem is sometimes it's too calm, and we
Right.
just kind of
Not enough
lost
oomph.
interest because it was not going anywhere until, of course, today. So it did look like a decent setup. It did look like a decent pop here, but we did pass on it because, again, my concern was that they were going to run into the same problem, that we were just going to, kind of get worn out of it and not really have the patience to stay with it. I should also mention that notable on the action today was that the consumer staples sector spider ETF, that was actually the top sector today. So again, kind of letting you know that the strength in the market wasn't really tech. It was XLP, XLE energy was also one of the top sectors today, and XLRE, which had taken a real big hit yesterday, that was actually up slightly today. So not exactly what you would consider the full-throated growth story on the market today.
Mhm. Okay, let's talk about VST.
Yeah, this was kind of the opposite of Walmart. VST is a lot wilder, and I did notice that in the YouTube for our live channel that we have going on, in the comments, someone was asking about how we calculate ATRs,
Mm.
and the ATR, of course, is the average true range. And basically, what you're doing is you're just taking the high and the low of the day, and you're averaging that out. Whether you use a 21 day or like what Market Surge does is it does use a 30-day time frame for that. Now, I will say that there is one little caveat, is that when you're looking at the average true range for a day where, like this day right here, where it was a gap down, instead of using the high of the day, you're actually going to use the close of the previous day. So you're basically, if there's a gap down, gap up, or if the high is, lower, you're going to use the gap, the close of the previous day. And in the same way, like on a day like this, instead of using the low of the day, you're going to actually use the close of the previous day as your low. And that kind of lets you know how much does this move on a daily basis on average. Vistra, VST, it's up there. It does not move like your typical utility. A lot of the utilities have been moving a lot more lately. And so this was an example of one that just kind of shook us out. We still do have our position in energy with CEG, Constellation Energy. And this one has been a little bit rougher. It's still staying kind of above, this low, but this one could be on the chopping block. We actually have a little bit more of a profit cushion on this one. We have about a 3% profit cushion because we bought it earlier on this reversal day. So we still have some cushion on this one. We just didn't have any cushion on VST, so that one had to
Right.
go. But we still have exposure to the space with the Constellation.
Mhm. Okay, Justin. Yeah, I think what the thing that we're trying to do here is to stay on top of these rotations, right?
Yeah.
And the tricky thing is to catch them at the right time, to not chase, to
Hmm.
to 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 follow the rotations, but not catch them too late, to catch them at the right time.
Yeah, and that's been one of the hardest parts because again, going back to IWM, the Russell 2000, this looked like a good kind of
Mhm.
entry here. As it wasn't a breakout because again, we've been having some problems with breakouts that a lot of them have. By the time it breaks out, it's kind of ready to rotate. So this looked really good, but you can see that you know a few days of uptrend, and that was all you got out of it, and it's right back down to kind of an entry there. So uh, this is something that we're seeing in a lot of different sectors, a lot of different places, individual stocks, and it does make it hard to make progress. It's one of the reasons why we're leaning a little bit more towards those pullbacks, looking for
Yep.
reversals over breakouts right now.
Absolutely. All right. Well, anything else that you want to go over ticker wise today?
You know what? I think that covers it on the ticker side.
Okay.
Let me just make sure. Yep, we
Pie
covered them
chart
all.
time?
Yeah, pie chart time. Let's do that. As we do every week, we like to show kind of where we're at in terms of our current our current holdings, and just as for comparative purposes, we did have a lot more breadth. This is something that we've been talking about, that we've been going a lot broader into a lot of different areas, because that's kind of what was working. There were a lot of different areas that were working, and again, RSP, that equal weighted S&P 500, was looking a lot stronger. We had a minimal cash position, and we even were going on margin a little bit recently. That did kind of change at the beginning of this week as we saw a little bit more rough stuff happening on the breadth issues. So, with that 10-year treasury yield moving as much as it has, that has shifted things. Look, part of it could be the election too, where it's at this point, there is that uncertainty level where people might be saying, okay, if this person wins, these groups are going to do better. If this person wins, these groups are going to be doing better. And with the election as close as it is, that could be a little, added uncertainty there. So between that and the 10-year treasury yield, a few things that
Mhm.
we're, looking at, uh, that could be causing these rotations a little bit
Right.
more. So as we look at our current pie graph, we have raised a lot more cash. We're still pretty spread out, but you can see that we've got kind of our big positions, and then a few smaller positions that we're still keeping on, but it's kind of the big positions and cash right now.
Mhm. Yeah. Well, hey, I mean, if you have cash at the ready for earnings season, we'll
Yeah.
have to see what these next couple of weeks bring. So maybe that's where we can wrap, Justin. I know you guys screen for stocks all the time, but in terms of for the audience out there, if they're wanting to look for setups as well, you can set up a pretty easy screen with a liquidity filter, a quality filter from the fundamental side of things, and then you can also look for stocks that, with that relative strength. So you know that the momentum's there, and then that are close to either the 21 day and or 50-day, right? That
Yeah.
might be a good place to start.
Right. And that's one of the good things about using market surge is that, that's what we're using. And you have a lot of different levers that you can kind of pull so that you can kind of
Mm.
focus in on the stocks that you want to focus in on. And again, you can make those changes as the market changes.
Yeah.
We do have some minimum liquidity requirements. So that automatically just really kind of shrinks our universe a lot. And, we'll go through, if we have to go through 400 or 500 stocks a day looking for those,
Mhm.
one of the things I've been doing lately is, okay, let me kind of peel off the ones that have earnings coming in the next 5 days. That shrinks it a little bit more, and then you find, it's not too hard to get through, quite a number of stocks as you just hit the space bar and go through them pretty
Mhm.
quickly. But the biggest thing that I'm looking for right now is kind of those stocks that are coming down to support levels, showing reversals, and they're just that aren't that many. That
Mhm.
a lot of the stocks are extended right now. They're not really coming in enough. But as you mentioned, we have that cash at the ready because if they do come in a little bit more, we might see some more opportunities.
Yeah. And earnings season could shake things up. So
Absolutely.
Well, and this little thing called an election we've had that you
Right.
mentioned coming up in
Yeah.
2 weeks. So
Yeah,
we'll
it's
be
a
prepared.
countdown.
We'll roll
The
with the
countdown is
punches.
coming. So,
All right. Well, thank you, Justin. And thanks everyone for tuning in to this week's Swing Trader status update. We will see you back here next week. Bye now.